Today we are going to focus on the benefits of the cash dividend strategy and how the cash dividends provided by the strategy can reduce stress and increase the percentage of winning trades. Chuck, can you show us some trade examples that demonstrate how the cash dividend strategy can help reduce stress?
Yes, Marie. Let's take a look at an option spread trade I am currently holding. My brokerage account trade confirmation shows that I bought 15 of the Goldman Sachs July 65 calls at $47.99, and I sold 15 of the Goldman Sachs July 95 calls at $25.69. This created an in-the-money option spread. Now, I collected a $38,500 cash dividend when I sold the Goldman Sachs July 95 calls. This cash dividend provided a big cushion in the event Goldman Sachs stock declines in price. Now, even though Goldman Sachs has experienced some sharp price declines, I was not forced to close this spread using my money management rules. Goldman Sachs stock is currently trading at 140.32. Now we can see from this call option spread analysis that Goldman Sachs stock could drop 30% all the way down to 98.22, and I would still realize the full 34% profit potential on this trade. So a sharp 30% drop in Goldman Sachs stock would still result in a 34% profit for this trade. Now, the markets have been very volatile lately, and this volatility can make the timing of your stock purchase very difficult. Stocks can easily decline 10 to 15% in one day. I presented this table in a previous video. This table lists some of the stocks that I currently own and recent one-day declines in these stocks. These stocks are on a buy signal based on my trend following systems and my trend confirmation indicators. I purchased Wells Fargo Bank stock in a buy right trade on March 23rd. Notice that Wells Fargo dropped 11% in one day on March 24th. Now this 11% drop occurred one day after my stock purchase on March 23rd. The stock dropped 14% on March 30th, and it dropped 16% on April 20th. Now, I was not forced to sell my stock using my money management rules, as I had plenty of downside protection with my Wells Fargo buy right trade. This brokerage account trade confirmation shows that on March 23rd I bought 1,500 shares of Wells Fargo Bank at $16.90 and sold 15 of the Wells Fargo July 17.5 call options at 360 points. This created a buy right trade that expires in 4 months. This buy right analysis displays the profit potential for this buy right trade, assuming various price changes for Wells Fargo stock at option expiration. The analysis shows that the break-even or cost of this trade is $13.30. So if I buy the stock at $16.90 and sell the call at $3.60, my cost basis for the Wells Fargo stock is $13.30. Now, I was able to hold on to my Wells Fargo stock during these volatile price moves because of the cash dividend I received, which provided a nice cushion in the event of a price decline in the stock. Now, as it turned out, my Wells Fargo buy right trade is one of the most profitable trades in my portfolio. With Wells Fargo now trading at $28.18, the stock would have to drop more than 52% to $13.30 before this trade would realize a loss. So I think these trade examples demonstrate that the cash dividend trades provide substantial downside protection that can help you maintain your positions through volatile price moves. At this point, even a sharp market correction would still result in profits for most of my cash dividend trades. Because the cash dividend trades provide such a large downside cushion, the timing of when you enter your trades is not that critical compared to a stock purchase strategy. This puts me more at ease with my trading and more in control of my emotions. And for me, this reduces the overall stress of trading.
Chuck, I noticed from looking at your brokerage account profit loss reports that all of your cash dividend trades are showing net profits, with no losing trades.
Yes, Marie, the large upfront cash dividend you receive can result in a high percentage of winning trades, even if your market timing is not very accurate. I trade the cash dividend strategy in 8 different trading accounts, most of which are retirement accounts. All of the trades in my 8 trading accounts are currently profitable. This brokerage account profit loss report for one of my 8 trading accounts shows my current cash dividend trades for that account. This account had a $312,000 starting balance when I initiated the current trades. There are currently over $118,000 in net profits after commissions for this portfolio. Now, I received over $152,000 in cash dividends for this portfolio, resulting in an average cash dividend of 49% for the trades in this portfolio. I reinvested the cash dividends I received in additional cash dividend trades, allowing me to compound my trading results. All of the trades in this portfolio are currently showing a net profit for the spread. Now, even if most of the underlying stocks in this portfolio decline, I can still realize a good return for the portfolio. I normally take profits when a cash dividend trade reaches 90% of its profit potential. This enabled me to take profits on trades well before option expiration and initiate new cash dividend trades, allowing me to compound the cash dividends I receive. Now, bearish cash dividend trades can also be established by using put options. I traded bearish cash dividend trades during the last bear market in the fall and winter of 2008.
Chuck, if viewers are interested in your cash dividend strategy, how can they participate?
Marie, I make cash dividend trade recommendations through my MVP advisory service. There are currently 38 recommended cash dividend trades. These 38 recommended spread trades receive total cash dividends of over $251,000. All 38 of these recommended cash dividend trades are currently profitable, demonstrating the versatility of the cash dividend strategy to produce profits during difficult market conditions. For more information on my MVP advisory service, log on to mvpadvisory.com or call our sales partner, Diversified Trading Strategies, toll-free at 877-872-3351.
Well, to sum things up, it seems like the cash dividend strategy strikes a good balance between risk and reward. The low risk and the high accuracy of the strategy demonstrates the versatility of the cash dividend strategy in producing profits during difficult market conditions. It appears that the cash dividend strategy is ideal for current market conditions. Thanks for listening today. We're looking forward to our next video. In the meantime, good day and good trading.